Good evening, traders. Today is Sunday, the 18th of June, 2017, and we hope that you've all had a great weekend so far. The markets are soon to open in a couple of hours. The time at the moment is currently 8:30 p.m. in the UK, and this is a student-only webinar where we'll be constructing full top-down analysis within USD CAD and GB pound Swiss franc. We do advise that you have a top-down analysis checklist in front of you. So whilst we go through the following two markets, you can also follow along with the top-down analysis checklist as well. We'd just like to give you the following news notifications before we proceed with our top-down analysis. This week is in fact a very quiet week with not many news announcements. However, on Tuesday the 20th of June, we do have the RBA meeting minutes along with the Bank of England Gov Carney speaking. So they are two events to watch out for this week, and they are on Tuesday the 20th of June. On Wednesday the 21st of June, we have two news events for the US dollar, followed by the RBNZ interest rate decision and also the RBNZ rate statement. On Thursday and Friday are both quiet days with only one release for the Canadian dollar on Thursday, followed by another release for the Canadian dollar on Friday, and we also have another release for the US dollar on the Friday as well. As always, we advise that you always check the economic news calendar before setting any market entry orders within any market. I would just like to remind you that we are unable to see the YouTube chat, so please ask any questions within the webinar jam chat. We'll stop for about 1 to 2 minutes between each time frame to allow any questions to be asked, and then I can answer those accordingly if there are any questions. Okay, so do hope that you guys have had a great weekend and have grabbed yourself a top-down analysis checklist as we are now about to begin. And we're going to start off by taking a look at USD CAD. Starting off on the monthly time frame, we'll be going through each time frame, monthly to weekly to daily, just how you should be when constructing your top-down analysis. Okay, so in front of us here, we've got our monthly time frame of USD CAD. And the first thing on our top-down analysis checklist is, in fact, to note down the monthly market structure. So just taking a look here in front of us then, just going to zoom in. We can see that we're just going to work our way back from this high wicked candle at the top here. So we can see from this high wicked candle here, price came to the downside. We had 3 bearish months where price technically printed a higher low here. You can see this is above the previous higher low, which creates that to also be a higher low. Price then rallied to the upside where we saw this indecisive candlesticks form, pull back to the downside for a month, then price has pushed back to the upside, creating a new higher high. Just using our crosshair there, you can see that price breached above the previous high there, creating a new higher high within the monthly time frame of USD CAD. And since then, we can see that price has come to the downside after seeing last month's candlestick, which was bearish as a rough spinning top there. You see the body is just slightly bigger than the wicks. However, the wicks are even on that candle there, creating that to be a spinning top candlestick. We're unable to take the current month of June into account as this month is yet to close. So we can make note then that the monthly market structure of USD CAD on the monthly time frame is printing higher highs and higher lows. If price was to break through this area here around the 129/1.3 area just here, you can see that I'm marking with the crosshair just there. If price was to breach beyond this point, then we would be seeing a monthly lower low past this previous higher low that we've seen the market print. So we can mark that down, higher highs and higher lows, and then the previous month's candle close, as I just ran over, is a bearish candle close, which is a spinning top showing indecision. Okay, so moving on to the third part of our top-down analysis checklist. To do so, we have to mark all of our support and resistance. So what we do is we always zoom out, taking a full overview of the whole currency pair. So we're able to mark all key levels from the monthly time frame, and we change to the line chart. Then we grab our horizontal line tool and simply just select the blue color, as that is what we use on the monthly time frame. So we always start at the very peak when constructing our support and resistance areas, and we want to be marking the key significant areas that give price a significant push. So you can see here previous resistance, and then looking right again, we can see now previous support. So if we just grab our horizontal tool again, this area here give price significant pushes to the upside and to the downside, just coming through there. You can see that we've actually had a most recent touch of that resistance area, very close there. You can see if we just go back to the candlestick chart, you'll actually see that that high wick does spike through the upper resistance of that as well. So just continuing through the chart, then marking on all our key areas of support. Just looking left there, you can see that area of support had 3 rejections all the way back in 1994 to 1996, and even in 1997. So just grabbing our horizontal tool again, there through there, you can always flick back and you can see that the candlestick is aligning there. And if we just go back to the line chart, you can see that it doesn't actually spike that area. However, when you go back to the candlesticks, you can see it aligns nicely. So just continuing through then, marking all of our key areas of support and resistance, and just continue through there. Okay, and now we're just down to the very final bottom there. And what we do then, after we are happy that we've gone through the top to the bottom, we just go back to the candlestick chart and we just have a look just to make sure that we are happy with all of our key areas of support and resistance that we have marked on the monthly time frame there. And I'm pretty happy with those areas. Any other areas that we may have missed can always be seen and marked on the weekly time frame. So we can now make a note and tick that we have marked our key levels, and they're drawn in blue. And the next part of our checklist is any key trend lines. Okay, so if we was to start marking a key trend line, we'd obviously have to start from the bottom, and you can see there that the next trend line from there would be like that. Now, price is quite very far away from these ascending trend lines at the moment, so I'm just going to remove them as they are not currently used for price. And we can mark down that there's not currently any trend lines. However, as we go down the time frames, you'll see that we do add some other trend lines on the weekly chart and obviously the daily chart. So it's just a note on the monthly time frame there. Next, we have any monthly consolidation patterns / potential patterns to form. Okay, so as I always say, guys, you can use the PDF downloads folder to download the consolidation patterns and have them in front of you whilst you're learning the patterns. However, just from looking at the market, as we've been trading the markets for so long, we know that we can see automatically that there's currently no consolidation patterns that could potentially form here on the monthly time frame. Slightly different as we go down to the weekly time frame. However, at the moment here on the monthly time frame, there's not actually any consolidation patterns. Okay, so potential monthly ABCD, not currently on the monthly time frame. It may be clearer to see an ABCD Fibonacci on the weekly time frame, however, not currently on the monthly. So that's a no. Next, rejecting our EMAs. Okay, so to do so, we need to open up our 20, 50, and 200 EMA, and we can see that price is currently just sitting at our 20 EMA. However, we're not currently seeing a rejection, so we can make a little note there in the monthly notes that price is currently sitting at the 20 EMA. However, we're not seeing an actual monthly rejection at the moment. However, it is a potential that we could see. Okay, so that's marking no and just making note of that within the monthly notes. And then next we've got bullish or bearish EMAs. Well, you can see there that the 20 EMA is above the 50 EMA and the 50 EMA is above the 200 EMA, and that should be very clearly bullish to you guys. Okay, so next is the Ichimoku cloud on the checklist. Just opening up the Ichimoku cloud here, then we can see that the cloud is firmly bullish. It's been bullish since the start of 2016 when the cloud crossed over bullish down here. As you can see, I'm just circling that with the crosshair there. And also the cloud is bullish, so you can just make note that price is above the cloud and also the cloud is bullish. So overall here on a monthly time frame, just taking a look through the notes that we've made there, even though the previous month's candle close was bearish, we are currently seeing higher highs and higher lows. Prices above our EMAs. Our EMA is currently bullish. Our Ichimoku cloud's currently bullish. So overall here on the monthly time frame, we are bullish, and that is our monthly biased. So we are overall bullish, and the monthly biased is also bullish. If you've got any questions, guys, are the very simple steps that we just took there regarding USD CAD on the monthly time frame, please do ask and I can run over those for you. Please do make sure that you ask within the webinar jam chat. Okay, so Toby's asking, what is the consolidation pattern app? Not too sure what you mean by that. There's not an app for the consolidation patterns. We have a downloads in our PDFs download folder where you can download and have them in front of you, as you will also see in our consolidation pattern lesson. So I'm not too sure what you mean by the app. And is the overall monthly bias bullish? Yeah, as I stated, going through the checklist there, even though the previous month's candle has shown a bearish candlestick, the market on the monthly time frame is currently still showing higher highs and higher lows. And if I just go back to the chart quickly, as I stated clearly, we'd need to see a break of this 1.29500/1.3 area for price to show a monthly lower low, as we would be seeing a break of the previous higher low. I hope that's answered your questions, Toby, and I do apologise that I am unsure of the app that you're talking about. However, we do have the PDF downloads within the downloads folder for you to print out, have on the wall in front of you, and always refer to when you're going through the charts, and just have a look backwards and forwards to always remind yourself, instead of you going backwards and forwards onto our lesson and back. Okay, so I hope that has answered the questions. What is consolidation pattern PDF? If you just go to technical on your login area and go to the bottom of the students tab, you will be able to see the PDFs downloads page, and then if you just scroll down, that will have the consolidation patterns there for bullish and bearish, for continuation and reversal. So all of the downloads are available there, along with the top-down analysis checklist, entry checklist, and many other PDFs. Okay, so I hope that's cleared up the questions there, and we're now going to move on to the weekly time frame. So if you grab your top-down analysis checklist again, just going to hide the Ichimoku cloud as we now go down to the weekly time frame. Okay, so just taking a look here at the market structure, which is the first thing. You can see here pretty much the market has been moving an upwards direction. However, it has been very choppy, as you can see back here in late 2016. Price was actually moving side by side for many months. But we've just taken a look at the most recent price market structure. Then you can see price created this low where price came up, created a new lower high. Price came down, failed to continue below this higher low, and create a lower low. Price formed a higher low here. Price pushed to the upside, creating this new higher high. And now price has come to the downside. And you can see last week has just breached past that previous high low there. So you can see, just using the crosshair, or should I mark it with just a quick horizontal line for you to see? Just there you can see that price has just breached past the previous higher low, which is actually now technically created a lower low within this market. So what we're going to mark down on our analysis checklist is we're just going to mark down that it's currently mixed market structures. We're not seeing lower lows and lower highs. We're not seeing higher highs and higher lows. We've actually seen a higher low, higher high, which has led now to a lower low. On the daily time frame, be able to see a bit more clearer market structure. However, at the moment on the weekly time frame, the market structure is currently mixed. Okay, so taking a look now at the previous week's candle close is pretty simple here. You can see there we've got a very large bearish candle. So it's pretty much just ticking the bearish candle close. It's not an actual Marubozu, as there is a slight wick on the bottom of this candle. However, it is a very strongly bearish candle close for the previous week. Okay, so now to mark on our weekly key levels, we zoom all the way out of the chart. Just slightly more. Just zoom back in a little bit, just get the full chart in view. Okay, so then opening up our line chart, and we simply just grab the horizontal tool, change it to red, as that is the color we use on the weekly time frame. And we simply just mark through. So you can see here, just at this top area here, you can see that just adjusted that slightly there, just to be the peak. It just moves ever so slightly there. That is possible to do. It's, what aligns best with the market. It's not manipulating the support and resistance areas. It's making sure what aligns best with the key areas of significant rejection. Okay, so just continuing through the chart here then, just taking a look, you can see that that aligns very nicely through them areas of rejection. And we can also see that is also aligning with the most recent higher high rejection that we just ran over within the structure. So just continuing through then, and we can see there we've got areas of rejection. Looking left, some areas of rejection, and looking right, we've got a most recent area of rejection at that 1.3 support area just marked. And just continuing through the chart now then, just taking a look back there. You want to take your time when marking your support and resistance. You don't want to rush it. You want to make sure that you get the key areas that you need to get. You don't want to be rushing it at all, as they are very, very key part to your analysis. Okay, so just continue through to that last bit down here then, where you can see just mark that last support, and just taking it back to the candlestick chart, and we just make sure that we're happy with all the rejections, just like we did on the monthly time frame. It's always good to just go back to the candlesticks and just make sure that you're happy with the areas of rejection. And I'm pretty happy with that. So what we're going to do is going to zoom back in and open the chart up a bit more, just like so. Okay, and now we can tick on the weekly time frame checklist that we've marked our key weekly levels in red. Okay, so weekly trend lines, as I mentioned, weekly trend line, we're actually going to draw a parallel channel on this chart. So just taking a look there, and we're just going to use that touch, just there, you can see onto this touch here. This area here just slightly breached above, and this area of the higher high here was just short of the upper resistance of that ascending channel there. So that is our trend line that I was talking about. It was easier to see on the weekly time frame than the monthly time frame. As you can see here, it is a bit harder to place that channel rather than seeing it on the weekly time frame. It is a lot easier to place. Okay, so we can just make note that yes, we've now marked our any key weekly trend lines, and if you wanted to, you could just put next to it a note, just say channel. Okay, so any weekly consolidation patterns / potential patterns to form. Okay, well, this could in fact be a flag pattern. So we have our first A to B leg down here, and then the flag tends to be the the B to C leg. And then you're looking for the C to D leg to play out. So if we was looking at this as a flag, we would need to use the Fibonacci tool. And it goes from point A down to the point B, where you can then see that price is within the Willis zone if price was to now show the C to D leg. However, price could show rejection from this lower channel support area where price is actually closed on the weekly time frame here. However, if we was to see price show a breakout of this channel and continuation to the downside, then we could very well see a C to D leg play out. So C to D leg, the overall D extension down here, you can see the minus 27.2. Don't know if you can see that as it aligns exactly with our 1.18500 support area that we just marked on the monthly time frame there. You can see the 0% also aligns exactly with the 1.24600. So you can see that the Fibonacci is aligning very nicely within the weekly time frame of this chart. We do have the potential of this bearish flag to play out. So if you take a look at the PDFs or the consolidation patterns lesson, you will see the flag pattern on there with the Fibonacci, and you can see here that we've got a Willis zone rejection and with the potential now of seeing a CD leg if price breaks out of this ascending channel. So you can make note there that on the weekly time frame, yes, a potential flag pattern to play out, and potential weekly ABCD. Okay, well, we've just pretty much run over that within the flag pattern as they go in conjunction with each other. So that would also be a yes, and you can just put a Willis zone rejection potential. So next is our EMAs. So just opening up our 20, 50 and 200 EMA, we can see that prices actually breached to the downside of our EMAs. Hopefully you can see that there. Prices actually breached to the downside of the 20 and the 50 EMA, which have been bullish since late 2016. Late 2016, our EMAs kept crossed over bullish. Just keep them bullish. You can see here it's hard to see through there as there's candlesticks side by side. However, they did cross bearish and then they crossed back bullish within late 2016, and they have been bullish ever since. However, we've now seen price cross to the downside of the 20 and 50 EMA. The 200 EMA is quite far away. However, it does currently align with that 0% support area at the 1.24600, which is that Fibonacci support that we just run over. So currently price isn't currently rejecting from our EMAs, so you can make a note or just tick no there, and you can make note that our EMAs are still currently bullish as the 20 EMA is still above the 50 EMA and the 50 EMA is still above the 200 EMA. So all three EMAs are still bullish. However, in the weekly note section just at the bottom, you can make note that price is on the bearish side of our EMAs. So next is our Ichimoku cloud, and we're just going to open that up. You can see here that price has also just closed below the Ichimoku cloud. However, the cloud is bullish, so we can make note that price is below the cloud. However, in the weekly note section, you can just make a note that the cloud is still bullish. Okay, so very simply, that is our weekly time frame done there. And overall, we're seeing mixed market structure. We've seen a bearish weekly close, which has closed showing a lower low. Prices in a channel. Prices closed at the channel. We could potentially see a rejection or a break of the channel. It's a bit mixed there. We do have the bearish Fibonacci. Prices on the bearish side of our EMAs. Price isn't currently rejecting our EMAs. However, the EMAs are bullish. Price is below the cloud, however, the cloud is bullish. So you can see there that we've got bullish and bearish confluences there on the weekly time frame, and it's very much mixed. So just to keep it very simple, we're going to keep our weekly bias as mixed. So we've got a bullish monthly bias, and we've currently got a mixed bearish bias. Whether we see a break or a rejection from that lower channel support will help us see whether price is going to roll over bearish or whether it's going to push back to the upside bullish. Okay, so I hope that was all clear for you there, guys. If you do have any questions regarding that, I can see that Emmanuel has already asked questions. Would you sell from the retest of the break of the parallel channel or the break of the 130 zone? Well, that will become a lot more clearer down on the daily time frames. Obviously, all entries are taken from the daily time frame, and there would be enough room between here and the support of 1.3 to be able to take a short position, which you'll see as we go down the time frames and get to the daily time frame. That'll become a lot more clearer for you, Emmanuel. So I hope that we answer your question as we go on to the daily time frame next. If there's any other questions, guys, please do ask those and I can answer those before we move on to the daily time frame. Okay, just for the latecomers that I've seen that have joined the webinar slightly late, we did have some news notifications at the start, and we will be also running over GB pound Swiss franc. I'll give the news notifications again at the end of this webinar. However, for the moment, we're going to move straight on to the daily time frame, as I can't see any more questions coming through. So let's move on to the daily time frame of USD CAD. Just going to bring this in slightly just so it's still visible to see as we go down to the daily time frame, which you'll see now. Okay, so taking a look at the daily time frame on the checklist, one thing I'm going to do is just quickly hide the 38.2 level just to make it a bit clearer and neater. So first things first, the market structure. So we can see here previously price created this high. As you can see, price created lower lows and lower highs down here. Price then ranged sideways, pushed to the upside, created this high, came to the downside for a higher low, back to the upside for a lower high, to the downside for a lower low, breaking past the previous higher low. Price is then pushed all the way back bullish for a new higher high up at the 1.37300 area, where price came to the downside. Technically could have been a new higher low, however price created a new lower high where price was in a box range for some time and has now come to the downside, creating a daily lower low. So at the moment the market structure on the daily time frame is lower lows and lower highs. So if you just mark that next to the tick box. And the next thing is the market currently retracing. Well, at the moment is partial retracement. As you can see, the market structure on the weekly time frame shows more of a retracement than it does on the daily time frame. So you can see here prices pulling back to this ascending trend line of the channel support, which could be seen as a retracement now on the weekly time frame. However, on the daily time frame, we've got the bearish market structure that's taken over, so we wouldn't actually call this a daily retracement. So any key trend lines, sorry, I just skipped daily key levels. So let's go back and we're just looking at the current price area for our daily levels. We don't zoom all the way out looking at the whole chart. We're looking at the main key areas and these are done in black. Okay, so we can see through there, just at that 50% area, we've got them rejections covered. And just taking a look down here then, just with our crosshair here, we can see that that previous area of that, which was a high low on the weekly time frame, which is technically a lower low on the daily time frame from this lower high down to the lower low. That area there, you can see rejection, and just looking along left, you can see further rejection points of support and resistance through there. And just taking a look further down, pretty much happy that they are all the areas of daily support and resistance that need to be marked on the chart. The rest are covered by the monthly and the weekly levels, so we can just give that a tick then that the daily key levels in black have been marked. Okay, so next we're looking at any key trend lines. Well, we can actually place a descending trend line on the chart. Just taking a look, just going to take it from that second touch, and I'm going to show you why in a second. So you can see there that we're just on that second point, and that's because if we was to have started at the very top, we would have been all the way out here. However, the other, using the second touch just slightly lower onto the next touch, gives us that nice angled trend line there flowing with the downwards movement that we've seen. So that is the descending trend line that we can mark here on the daily time frame. Any counter trend lines? Not at the moment. We can't place counter trend line. If price was to retrace back up to that 1.33600 area, then there could actually be a small counter trend line placed on the chart, which would be an ascending counter trend line. Okay, so any daily consolidation patterns? Nope. As we know our patterns, we can see immediately that there is no daily consolidation patterns currently forming. Next, we're looking at a potential ABCD on the daily time frame. Well, as the price hasn't currently retraced at the moment, we would be just looking at this area here where you can see price showed a, price showed a 38.2. Might be quite hard for you to see that there. You can see we've used point A down to B. Retracement was this C, 38.2. We've actually seen price achieve that minus 27.2 extension there, and potentially could now reach the minus 61.8. However, that ABCD has pretty much played out. We could actually place a new Fibonacci if we do see a break retest. Could see a retest of a 38.2 before seeing price reach that 1.3 support area down here. So it's a previous Fibonacci, so not currently. And next is our EMAs, so 20, 50, 200. And we can see that price is now on the bearish side of our 50, 200 and 20 EMAs. So all three EMAs prices crossed to the downside of. And we can see that currently our EMAs are bearish, with the 20 EMA just crossing over the 50 EMA. They are still both above the 200 EMA, however they are heading towards the potential cross to the downside. Is the market currently ranging? Sorry, I just skipped something there. Price is on the bearish side of the EMAs, and we now have the Ichimoku cloud. I do apologize there. Okay, so you can see here that price has crossed to the bearish side of the cloud, and the cloud is bearish, which has crossed over recently. So you can just make note, you can actually tick the prices below and just make note in the daily notes that the cloud has crossed bearish. Okay, so it just says there, is the market currently ranging? If yes, don't trade within the range. Well, we can see that price isn't currently ranging. Oops, sorry, pardon me, guys. Price is at the ascending channel support, and it looks that on the daily time frame there that we've previously seen a Marubozu close on that Friday last week, where you can see that the candle has actually technically now closed below the 1.32333 support area, the daily area there, and has closed outside of the ascending channel. So from here, guys, we could actually see price now show slight continuation to the downside, just rough there, and see a pullback as a retest before seeing continuation to the downside. So that is what we'd be looking at for a potential shorting opportunity. For a long opportunity, we would need to see price back above this resistance here, purely and simply just to allow the market structure to change again, and then we would be able to take longs targeting overall the upper channel resistance. However, at the moment, just taking a look there from the daily time frame, you can see lower highs and lower lows. We can see that we've got a descending trend line there. Price isn't currently retracing. We've got the bearish market structure, previous bearish Fibonacci. Price has just breached the ascending channel support. We're watching for a potential retest there. So at the moment, if we do see that break retest, then we will be looking for shorts. At the moment, on the daily time frame, we're overall bearish, unless we did see price show a rally up to the upside, creating bullish market structure. If we did see a break pullback retest acting as a new higher low there on this descending trend line, then we could very well take a potential long position up to the 1.35. It would void the potential flag pattern for the moment until we could see a new leg to the upside before seeing that flag pattern play out. If the flag pattern does play out, not always do we see the consolidations always play out. However, we will be looking for the break retest of this ascending channel within the daily time frame of USD CAD. So if you have any questions there regarding USD CAD on the daily time frame, please do ask. I hope that break retest question that Emmanuel asked has been answered now, and we would be looking for that break retest if we see it over the next week with some bearish price action at that just to remind me, 1.32333 support term resistance. So if you've got any questions, please do ask those now before we move on to GB pound Swiss franc. So that is our overall view of USD CAD, breaking it down very simply from the monthly to the weekly to the daily time frame, where we can actually then see a potential opportunity that could arise, and it's one that we're actually watching over the next week. And you'll also see the same within GB pound Swiss franc if you've not already seen it on our social media page. So Manuel's asked, short target would be at the minus 27.2% extension, or just monitor it with the stop loss technique. Well, you do always target the next barrier in a line. So here you can see that we've got this support here at the 1.3 area. Then the next area is the 1.27. 0.300, then we've got the 0% support area. So there's a long way before we would get to that minus 27.2. So we have a lot of barriers in the way where we would be anticipating the market to fluctuate. Obviously, we're not going to just see a straight drop. We are going to see the market fluctuate, hopefully creating lower lows and lower highs if the market does continue with this break retest here, which we've seen from this bearish Marubozu close. So yes, use your trailing stop technique. However, I wouldn't just set your target all the way down here at this minus 27.2, as you are kind of asking for a miracle for this trade just to straight run off and absolutely fall off. We would be looking for the market structure. So first target would be the 1.3 area, second target the 1.27, unless there is a Fibonacci play within this, which we could actually then place a Fibonacci and target them areas. You have to adapt to the market. However, the first target is the 1.3 support area, and at the moment the second target would be the 1.27300, and the third target the 1.24500, which aligns with the 0% area, and continuation beyond that is the minus 27.2. So I hope that answers your question, Emmanuel. Any other questions, guys? Please do ask those now before we move on to GB pound Swiss franc. Okay, guys, doesn't seem though we have any other questions. We're now going to move on to the second and last market of this evening, constructing full top-down analysis of GB pound Swiss franc. Okay, so we're just going to go to the monthly time frame and just take a look at the overall market structure. Okay, so we can see here, just looking at the most recent here, from 2015, price has been moving within a downwards direction, creating lower lows and lower highs. With the most recent, the market showing a pullback, and prices currently range for some time. So we can class this as a current lower high on the monthly time frame, and the previous month's candle has closed as a bearish engulfing. So we can mark down market structure showing lower highs and lower lows. We've just clearly identified that. And also the previous month's candle closed bearish, and it was an bearish engulfing candle close. So you can make that note just next to the bearish tick, or you can make it in the monthly notes bit at the bottom. Okay, so next you should be able to see is our support and resistance. So we're now straight in, and we open the chart up as much as we can, still being able to see the full currency pair from start to finish, go into the line chart. Okay, so straight onto our horizontal line tool, change it to blue as that's our monthly color, and then we mark through our key areas of support and resistance. So just that up there, we would class that more of a weekly level. Just continue through then. That's some nice significance there. The significance is giving price that push in the opposite direction is what you're looking for. You're looking for them very key areas. I'm just going to quickly go back to the line, the candlestick chart, just to confirm my areas there. Okay, so no matter what, no matter how advanced you are, no matter how long you've been trading, you always want to take your time and make sure you're getting your key areas of support and resistance in the right areas. There's no point rushing them and having rubbish areas, that's for sure, because the market just will not react to them. So you want to be able to just easily take your time, no rushing. Sometimes you have to go backwards and forwards. It's what needs to be done. Everyone does it, so just be willing to do so. Okay, yeah, that aligns nicely through there, the 2.097, and let's just continue through them. Let's continue in through the chart. Okay, just coming down now to the bottom right hand corner area. Just going to go back to the slightly off there, significant, that probably be a weekly area. We'll make sure that we check that on the weekly time frame. And if we just mark the very bottom there. So when we go down to the weekly time frame, we just want to remember, just take a little look around this area here, see if there's potential. As you can see, going back to the candlestick chart, we do just fall short of this support area here for the 1.37970. So just going to take an overview here. You can just bring this one all the way to the peak there of that wick, and just taking a look through there. Pretty happy with that through there. We've got that significant rejection and through there, yep. Okay, got that rejection through there. Okay, so I'm pretty happy with the rejections, apart from we're just going to take a look at this on the weekly time frame when we do go down to the next time frame. So we can now tick that we've done our monthly key levels in blue. As you can see, I took my time, no rushing, no need to ever rush your levels. Just take your time, make sure you get them where you want them. So next, any key trend lines? Well, not currently on the monthly time frame. It's actually easier to place this trend line on the weekly time frame. So I'll show you there on the weekly. So that's a no. Any monthly consolidation patterns? Again, being in the markets for so long, we can see instantly that there is no current consolidation patterns or potential patterns to form. Potential monthly ABCD, not currently. It's actually easier to mark that on the weekly time frame as well, which we'll go over shortly. And then the next is rejecting EMAs. Okay, 20, 50, 200. Opening up all three EMAs here, we can see that price isn't currently rejecting our 20 EMA. However, the previous month's candle did come close to the 20 EMA. So it's not an actual rejection, so that's a no. However, you can make note that it was a close spike of the 20 EMA, and which give the price push to the downside. So then just next, we're looking see whether our EMAs are bullish or bearish, where you can see that our 20 EMA is below the 50 EMA, the 50 EMA is below the 200. You can see here the 200 EMA doesn't have much length. That's purely and simply because of the EMA is calculated on the past 200 candles, and there's not enough candles to continuously calculate this further back. You can also see here, just looking in the top left corner, that the 50 and the 20 EMA also do stop short, as there's not enough data passed beyond this for the EMA to be calculated any further. So it's a very simple explanation why that is, and it's purely and simply down to the amount of data that there is. You'll see that on some monthly time frames there is no 200 EMA, and that is purely and simply down to there not being 200 candles previous for it to be calculated. Okay, so next, just taking a look at the Ichimoku cloud, and we can see here that the cloud is bearish. Price did have a little stint where it broke above the cloud, however came back to the downside, break, retest, continuation to the downside. Cloud did cross bullish for some time, however it is now back bearish. So we can now tick that the price is below the cloud, and just make note in the monthly notes that the cloud is bearish. So just running over then our monthly time frame checklist, we've got lower highs and lower lows. Previous month's bearish engulfing. We've done our key levels, no trend lines, no consolidation patterns, no monthly Fibonacci. Prices below our EMAs, close 20 EMA rejection recently, The Ichimoku cloud is bearish and price is below the Ichimoku cloud. So overall there you can see that we are overall bearish on the monthly time frame as all of our confluences are aligning bearish. So we're just going to take a minute or so if you guys have any questions regarding GB pound Swiss franc monthly time frame. There you can see very simple. All we've had to mark is our support and resistance areas and take note of the other key points. Market structure and the price action is very key to take note of. Okay guys, seems everyone's happy there with the monthly time frame of GB pound Swiss franc. We're now going to move on to the weekly time frame, which is up here in the top left hand corner. It's extremely hot here in the UK today, especially in the office, so do forgive me there for the mistakes made. Okay, so now what we're going to do is going to take a look at the market structure on the weekly time frame. So just taking a look here on the weekly time frame, we can see here that the market was producing lower lows and lower highs, come down, created this lower low, pullback for a lower high. Price then created a higher low, a lower high, higher low, higher high. Price has now come back to the downside and hasn't technically yet broken the previous higher low, and hasn't created a lower low just yet. So we can mark on the weekly time frame market structure that we was seeing lower highs and lower lows. However, we have seen a most recent higher high, which was just a spike above the 1.29 resistance area. Previous week's candle close, well, you can see here pretty much very simple there. Previous month's candle close was a bullish candle. Price did have this push back to the upside. However, we're not looking for this market to continue much further bullish, and you'll see why as when we go down to the lower time frame of the daily time frame. So you can make note that the previous week's candle close has closed bullish. So next we are looking at any key trend lines. Okay, well, we're looking at a trend line to the downside, as on the monthly time frame we've got overall lower highs and lower lows. So just using this point up here, you can then see that price has been showing rejections from this descending trend line. We did actually see a slight fake out of this trend line here where we had this shooting star, which has given price that push back to the downside. So you can make note that yes, a descending trend line has been marked on the chart. Taking a look next, we have any weekly consolidation patterns / potential patterns to form. Not currently at the moment. We don't have any current consolidation patterns on the chart. Next, potential weekly ABCD. Well, we thought that there could have been an ABCD here. However, just taking a look, we can't really see there being a bullish Fibonacci or a bearish Fibonacci just yet on the weekly time frame. If we was looking at anything, it would have been a bearish Fibonacci from the long leg to the downside, pulled back to the upside, where you can see the 38.2 retracement there. 38.2 retracement there aligns exactly with the 1.28723 resistance. However, we're not really looking to mark this as a Fibonacci on the weekly time frame. As you can see, we've got a lot of smaller moves in here, and the market structure was currently showing lower highs and lower lows. However, we have seen that recent higher high, which has thrown it slightly out. So from here, we are now onto our EMAs. 20, 50, 200. We can see that all three EMAs are bearish, so we can tick bearish, and price is below the all three EMAs. Price isn't currently showing a rejection from the EMAs. However, we could see one over the next week from that 20 EMA. As you can see, price has just pushed back to the upside within the last week. And then we're just going to open up our Ichimoku cloud, and we can see that we've had a recent rejection from the cloud there back when price showed that shooting star, which was the third touch of that descending trend line, slight fake out on the daily time frame. However, that was a 50 EMA rejection, a resistance rejection, and a 50 EMA rejection. So there's many rejections there, which give price that push to the downside. And we can make note that price is below the cloud and the cloud is also bearish. So just rounding up then from, sorry guys, I've actually completely missed the weekly levels. I really do apologize. Just noticed. Okay, cool. It is really hot in this office right now, and I do really apologize for that. I've just completely skipped through that. So all I'm going to do is just quickly remove this descending trend line, close up the EMAs, zoom all the way out. Wow, I've never actually done that before on a webinar. Okay. So just like so, go to the line chart and use our key area of red. Okay, so just taking it back, we can see here this spike did actually reach that resistance, so we can actually ignore this area just here. There's no point marking a resistance here when price did actually reach up to that 2.73 resistance area. So we're now just going to come through the chart, just taking a look through there, just maybe bring that slightly lower, just to get all the rejections through there. Just quickly go back to the candlestick chart. Yep, nice. Grab our horizontal tool again, continue through, just through there, continuing down, an area through there, one there, okay. And now we're looking at the area where price was showing that area. And I'm just going to mark an area of support on it and just go back to the candlestick chart just to make sure that we need to have that there. And that is pretty much, just going to go back. It's very close there, very close. However, it is required. Okay, so I do apologize, guys. Just going to take a quick overview of the pair and just taking a look there. Okay, I seem to be pretty happy with all those support and resistance rejections, and I'm now just going to mark back on that descending trend line. And again, I really do apologize for missing our support and resistance there. As I said, it's the first time I've actually done that on the webinar, and as that's exactly why you use your checklist, so that you don't miss things out like that. Okay, so just going to quickly run over top to bottom then the weekly time frame notes that we just made going through the top down analysis. So we previously did have lower highs and lower lows. However, we've seen a recent high. Previous candle close was bullish. However, the market's not showing a push to the upside fully just yet. We've got the descending trend line, which price is currently holding below. No weekly consolidation patterns, no Fibonacci. Price is below our EMAs, however, it's not rejecting our EMAs. Price is below the Ichimoku cloud, and the cloud is bearish. So overall, whilst price is below the Ichimoku cloud, whilst price is below this descending trend line, we are still bearish on this market. If price was to show a push to the upside, breaking that 1.28700 resistance area, that monthly key resistance, then this market could very well become bullish, and we could see price back up at that 1.37970 resistance area. Okay, guys, so if you have any questions there regarding that GB pound Swiss franc weekly time frame analysis we just went over, a little bit messy there because I did actually miss the weekly levels. Can't apologize enough. However, if you've got any questions, please do ask those before we move on to the daily time frame of GB pound Swiss franc. Okay, guys. So no questions there on the weekly time frame. Again, I have to apologise again. However, let's go on to the daily time frame and complete this analysis. So just going to zoom out and we're just going to take a look at this bottom area to I was just about to go straight on and mark the support and resistance so that I didn't miss them again. But first of all, we'll take a look at the market structure. Okay, so just taking a look at the most recent market structure, you can see here we were seeing higher highs and higher lows, very small higher highs and higher lows, where price then created this overall high. Prices come all the way to the downside, pulled back for a lower high, down to the downside for a lower low, and we could potentially be seeing a new lower high form where price could continue to the downside. So at the minute on the daily time frame, just identified lower highs and lower lows at the most recent market structure that we're seeing. So taking a look just quickly at Friday's candle close here, you can see that we've got a slight doji, but it's got a lot more selling pressure than buying pressure on this candle, which could in fact lead this to the downside. Is the market currently retracing? Well, yes, we've seen the lower low pull back, and that is a retracement at the moment. So that is a yes. Daily key levels. Okay, let's get these on. So we're looking at around this area here for the moment. And we're just going to grab our horizontal tool, grab that black, and we're just going to mark on this key area of resistance through there. The next key area we are looking at is just through there, where you can see the previous break retest has occurred, and we'll just take a look at one more area of support just through here. So we can see here that price is actually within the area of a support and resistance of the 1.25 and the 1.22500 area. And so we can mark yes that our daily key levels are drawn. And next we're looking at any key trend lines. Yes, we have a key trend line, and this is very key. So just starting off from the very bottom here on to that touch there, you can see that we've now recently seen a break pullback, and we're looking at a retest here for the continuation to the downside, which is what we also posted on our social media. So we can mark that as yes, we've marked an ascending daily trend line on the chart. Any counter trend lines, it's a bit too steep to mark a counter trend line on that retracement back up for that lower high. So that's a no. Daily potential Fibonacci's. Well, it's very, very, very small, this Fibonacci. We can mark it on the chart from this previous lower high down to the lower low. And you can see there that we've seen a 78.6 retracement at the moment. And if we was to see price continue to the downside, we would obviously first target the 0% area, which would always be our first target, just in case price does show a double bottom and a rejection. Break of that 1.22500 support, we're looking at the minus 27.2. And then the minus 61.8 area, which aligns closely with the 1.20300 support. So we can mark that as a yes. We've got a 78.6 Fibonacci percent retracement on the Fibonacci. Now taking a look at the 20, 50, 200 EMAs, we can see that prices come close to the 20 EMA at the moment. We could see price just spike back up to the upside and spike the 20 EMA. Actually spike it itself, as at the moment it's only a close touch. So it's actually a no for rejecting EMAs. However, price is currently at the 20 EMA. Bullish or bearish EMAs, where you can see the 20 EMAs below the 50 and the 50 below the 200. So that means all three EMAs are bearish. So we can tick bearish. Price above or below the Ichimoku cloud. Okay, so open it up. We can see that the price is firmly below the cloud. Recently seen a crossover. Price crossed, broke, pulled back, and then continued to the downside. So price is below the cloud, and the cloud is also bearish, as you can see here. So just rounding up, then we've got lower highs and lower lows. The market is currently retracing. We've marked our key levels. We've got an ascending key trend line, which has currently been broken. Potential retest at the moment. No counter trend lines. No consolidation patterns. We've got a bearish Fibonacci. Price is below the EMAs. Price isn't showing a rejection. However, it's currently at the 20 EMA. Price is below the Ichimoku cloud. The EMAs are all bearish, and the cloud is bearish. So overall, from the monthly bearish, weekly bearish, and the daily bearish, we're overall firmly bearish on this pair, and we are looking at actually taking a shorting opportunity from this candle that closed on Friday. Just going to highlight it for you. This candlestick right here. You can see there we're seeing a bit more selling pressure than buying pressure, some indecision at a lower high point. If we do see the daily low of Friday's candle broken tomorrow, then we will look for our entry to be triggered and taken into a bearish trade, and we will target first of all the 1.22500 support area, which aligns close with our 0% Fibonacci. So from here we are looking at continuation to the downside. First target, and then the second target, if we see a break of support, would be the minus 27.2, break of the minus 27.2, and we would be looking at the 61.8, which aligns close with the 120.300 support area. Okay, so I'm so apologetic for missing them key levels in the weekly time frame. I feel very bad. However, these things happen. Just have to apologize and move on. So USD CAD, we're looking for a break retest of the ascending channel. Just taking a look back here, taking a look at a break retest of that ascending channel if possible, or the 1.32333 support term resistance. And on GB pound Swiss franc, we're looking at continuation from Friday's candlestick, acting as a potential retest there, looking for the continuation to the downside. So that is the two pairs of this evening. And I'd just like to quickly remind you that this week's a quiet week for the economic news. Not many announcements. However, on Tuesday, the 20th of June, we have the RBA meeting minutes along with the Bank of England Gov Carney speaking. Wednesday, the 21st of June, we have two news events for the US dollar, followed by the RBNZ interest rate decision and rate statement release. Thursday and Friday are both quiet days with only one release for the Canadian dollar on Thursday, followed by another release for the Canadian dollar on Friday. And we also have one release for the US dollar on Friday as well. If you've got any questions there regarding GB pound Swiss franc or anything we've gone over this evening, please do ask. I can see, so the sell stop would be placed 10 pips below the doji. Doji showing more selling pressure. Doesn't quite make sense, Emmanuel. So the sell stop would be placed 10 pips below the doji, showing more selling pressure. To be honest with you, I don't like to give direct signals. I'm not looking to give direct signals, so I'm not looking to give you an exact entry and exit point, because obviously there's no guarantee that this trade is going to play out exactly. However, we will be looking rough. This is just a rough risk to reward here, so this isn't the exact risk to reward that we will be taking. However, you can see that there, from what we've marked on the chart, we've got a 2.83 from a 1 to 2.83 risk to reward. You would initially have your entry point 10 to 15 pips below, and your stop loss 10 to 15 pips above the daily high. However, guys, this is not a signal. We don't give signals of exact trades to enter. However, from here, we are looking for the market to go bearish. I'm sorry that we don't give direct signals. It's just not what we do. I hope that answered your question there, Manuel. Just a rough, quick example there of the risk to reward that could be placed on a short order. Okay, great. That makes sense for you. Guys in the room, any other questions? Please do ask those now, as we've now come to. So for our daily bias, we'll be bearish. Yeah, as I ran over, Toby, we did go over the checklist of the daily, going over the lower highs, lower lows. The market's currently retracing as we're seeing a new lower high form. We've got the broken ascending trend line. There's no counter trend lines. It's very steep. We've got a bearish Fibonacci. We've got price below our EMAs. Price is close to the 20 EMA, not currently showing a rejection. All three EMAs are bearish. Price is below them. The Ichimoku cloud is also bearish. Price is below the cloud. So you can see there that from all those points that I'm stating, they all are in favor of the bearish bias on the daily time frame. And you can also take note that from the monthly time frame it was bearish, the weekly time frame it was bearish, the daily time frame it was bearish. So overall we're bearish, and on the daily time frame we're bearish, and we're looking for the market to continue to the downside, as you can see very nicely marked on the chart there with the arrows pointing to the downside. We could, as I said, we could see price spike up just to have another test of that 20 EMA and the ascending trend line before continuing to the downside. However, if price does break above this descending trend line, then we could be looking at a bullish bias. However, at the moment we are bearish on this market. Okay, so I hope that's answered all of your questions this evening. I hope that you followed the top-down analysis with your own checklist. No problem, Emmanuel. I hope you tune in to tomorrow evening's webinar. We have another webinar tomorrow at 10 p.m. where we'll be taking a look across quite a few markets, including some commodities, where we'll be taking a look for potential moves across the week. So thanks for tuning in, guys. I hope it's been a great help. And I look forward to the week ahead. It's a quiet week for news, so take advantage of it. Always check the economic news calendar before setting the market entry order. That is very, very key. So I hope you guys enjoy the rest of your evening. That is it from us here at Technical FX, and I look forward to speaking to you tomorrow. Good evening, guys.